lot of stimulus coming back into play. All right, so there is the talk about everybody getting $2,000 from tariff revenue. There is the talk of QE, which is quantitative easing, is going to stop, and they are quantitative tightening is stopping, and they're moving back into QE, which means money printers are going to be turned right back on. What that generally means to me is, number one, they see issues. So number one, there is the fact that unemployment has skyrocketed. Inflation is going to be right back onto the table. If we do give everybody a stimulus of $2,000, you can bet a bunch of money is going to flow right back into the markets as well, and back into assets. Everything's going to get more expensive. So the Fed's going to have another issue to deal with. And if Jerome Powell ends up retiring and they move on to the next guy, I mean, I'm guessing the next guy, if he's going to do what the president, the president's bidding, we're just going to see money continue to flow into the markets. Now, keep in mind, if we're going to get $2,000 each for the tariffs, which, by the way, Polymarket says there's like a 60-70% chance it's not going to happen. But if we do see that type of money come into our pockets, keep in mind that generally means billions of dollars are going to be given to, the rich. Okay. So as much as it sounds great that, we're each going to get $2,000 as long as we're not considered high income earners, blah, blah, blah. I mean, that's the stimulus checks that we saw back during COVID. If you look a little bit more closely, there were billions and billions of dollars that were given to the rich at the end of the day, and that's where all the money flows into the markets and boosts it up. So keep that in mind. But yeah, as of right now, I think Oracle, we might just see a little bounce around here till it makes another decision as to what direction to go. But the reasons for why it would go up right now have a lot more to do with quantitative easing than Oracle's valuation going up simply because they're actually doing something to add value to this economy or to their company.
By the way, just a heads up, the shutdown, so that vote last night, just want to let everybody know. Eric, I don't know if you touched on this already or not.
Not yet.
Okay, so in terms of the shutdown, it's not like necessarily over, but yesterday pretty much like solidified it. But the big problem with it is the Democrats basically like rolled over exactly as people thought they would, because they essentially just put their entire side through hell for 7 weeks for no reason. Because now, guess what? They can just go ahead and delay that vote again, and they'll just go through another shutdown because Trump has showed that he's not afraid to do that. So I just want you guys to understand, like, if we don't see a crazy pump, like the pump from today is from the housing bill. But if we don't see like a crazy pump immediately from this government shutdown being relieved like a fart that's been held in for too long, it's because it's not, if you really do the digging into it, it's not as beneficial as you think it would be, because it's going to cause more issues down the line, especially in the next, probably, I would say in the next like year and a half, we'll really see the effects of what the fuck just happened over the last 7 weeks, basically. This is going to be like when a tech company introduces new software. It takes about 12 to 18 months to have it hit the bottom line. This is going to take about 12 to 18 months to hit the bottom line of shit. Like, don't be shocked when mortgages are at 8%, 7.5%. Don't be shocked when inflation is still going to be sitting at about 3.1 to 2.9% on a consistent basis. So as great as all of this seems from an economic and a socioeconomic standpoint, it's a nightmare if you're essentially not worth more than $1 million right now.
Yeah, okay, so, in terms of optics, in terms of the political and the way that they spun it, number one, Trump gets to continue to blame the Democratic side of how they held out and they could have just come to a resolution earlier. right? That they caved, etc. When you take a really close look to it, the 8 senators, right? The 8 Democratic senators that
Mm-hmm.
caved are all over the age of 65 and not looking for re-election next round.
Yep.
And they also basically all got paid out. So I noticed something where it looks like they got some decent sums of money for caving at this point. Um, it didn't really resolve too much. There is a temporary resolution on the table now, and things will be funded for, I think I saw January 30th,
Yep,
was
you're
it?
right.
Like
January
just through that.
30th is the cutoff date, and that's when they, I think, go into another vote, by the way. And
Yeah, and
that's
then
for
they
the
have to go.
healthcare.
So they kicked the can down the road. That's really
Yep.
what it was. They kicked the can down the road. A couple of people, those eight Democrats are basically going to take the full brunt of the blame, but they don't really care because they got paid out. They get to go buy another mansion or whatever it is with the money that they got. So ultimately those 8 people screwed the rest of the Democratic Party because now it just basically looks like, well, you guys held out this entire shutdown and caved at the end of the day, and it's not as if anything really changes at the end.
And
But I will also point out, I've always believed that at the end of the day, there a lot of it's really just for show.
yeah.
It's all political theater. And they, you know, they'll pad their wallets
Well,
while the average American, you and I, are the ones that will end up, footing the bill down the line.
and one
So
thing to point out, by the way, this isn't even, as I mentioned, it's not even the final vote. It's like basically now it just got voted so that the Senate can debate the bill. So like the Senate could get the bill and be like, we're not doing it. What? No, like we're not doing this. And like think about it like this. All of my gamers out there, think of it as you just got to the next level in the world's most boring fucking video game where you were like, "Oh my god, something's finally going to happen." And then it's like just doing more shit. It's like that economic joke where they say like you have someone from the Democratic side and you have someone from the Republican side walking down the street and it says, "Hey, I'll give you $100 if you eat that shit off the ground." And then the guy goes, "Okay, great." They see another piece of shit like 100 yards away. He goes, "I'll give you $100 if you eat that shit off the ground." And both of them go, "Well, at least we're stimulating the economy by creating jobs because you have people eating shit and they're getting paid $100 to do it." So that's pretty much
that's a
like
special way to put it.
like
That's a special way to put it.
that's pretty much the easiest way to put it because at the end of the day, like a lot of this is not even gonna immediately affect things because all it could do is put this on the back burner for a small period of time where we see an unrealistic pump into the market. And like, yeah, like, dude, Eric, we streamed the whole thing last night. And oh my God, like the final vote took an hour and a half alone. Like, we were just sitting there, like, and everybody's like, where is Cornyn? Like, where the fuck is this? He flew from Austin, Texas into DC, by the way, to get there. Like, and then all of a sudden it's like, oh, it passes. It passes. Like, what? Like, no, everybody, it literally passed and everybody left. Like, everybody. That's how I was just like, okay, so clearly this was like baked in.
Yeah.
And by the way, all they needed was one more vote to go no because they wouldn't have gotten the 60 at that point. So it could have been one of those Democrats flipping, saying no. And guess what? That thing would have been over like an hour before we even had to wait for Cornyn to even get into town.
Yep.
So, and it was literally, it was fucking horrible, dude. Like, I don't know. But the housing bill is why SPY pumped today, FYI. It's probably, and think about it like this, though. Think about the economic state of things. We're going to start getting data again, but guess what that means? Shit is going to start crashing because all the cracks in employment, in CPI, PPI, in all these different industries that we've been able to neglect and act like don't exist are going to start to show up in reports now, and the market is going to overreact. That's why we're seeing hedges into 1219, 2025 right now for SPY puts when we're seeing those bigger prints when we're looking at SPY, right? So 1219, I want to say, is it 220? Is it 220, the February, most common February date? Yeah, 1219. You'll see some 1121s. 1121s, you can think of those as short-term hedges against downside exposure. Those are not going to be actual positions. Those are going to be YOLOs because they have a way bigger position on the upside, probably playing into 700. And that's where you'll want to see what calls are people selling right now. That will give you an indication of where we're expecting the market to go. And then also pay attention to the dark pools, because the dark pools are going to allow you to see where are institutions building support. So if you see someone deploy $125 million on SPY at 682 or 681 or 676 or whatever your price level is, then you can think of that as an institution that's building support into a longer term position. And then you go ahead and look at the calls that are being sold, because that is typically where they're looking to target for an exit at some point, or for where they could add more. So just a little heads up about what happened today, because I had a lot of people, like even my friend Los called me and was like, why the hell is SPY pumping? Like, we just had a fat sell-off to go gap fill down to 672, but now we're going to pump to 682. And today, those were the two scenarios I gave you. I said, we either gap fill to 672, or we're going to go visit pre-market low and then revisit 682, the gap above. And that's exactly what happened. We did 200% on SPY shorts, and then I ignored Sofo King because I'm an asshole, apparently, and did not take his calls that went from $15 a contract to peaking at to about, I think, $1.85 a contract. So 150 bucks could have been about $1,800 or more today, folks. So that is my bad.
Alongside with everything you're saying, so number one, the VIX has not relaxed back down. All right, we want to see this ideally back well under 18. I mean, we're just flirting with 18 right now. So 1788. We would like to see it down close to 16 if possible. That would let markets probably start running a little bit more. Then add on the dollar index. Dollar index has not completely made a full decision, but here's what I'm noticing is the fact that we are back at somewhat of a support level. So we are in this channel headed up right now, and we are retesting this area right here. So right about here is where we could definitely see this bounce. Remember, DXY, the dollar index, is inverse, same with the VIX, inverse to the markets. So if this starts to go up higher, then we will start to see SPY go down. In addition, look at my SPY chart. I need to delete this now that it's played out. But basically what I had charted out for you played out almost perfectly. Mm-hmm. I always remind you guys, I'm not always going to be completely down to the cent on it. But for example, this basically played out over here. Okay. Then we had a very quick bounce in this area, came down, and I had it drawn to this level, but it came in. It did bounce a little bit right here, but actually the real bounce obviously came a little bit lower. So if you kind of redraw mine just one level down further, it reacted exactly how I had drawn out there, guys. Okay. So that's the thing about making sure you draw out your support resistance. Take a look, understand what's going on with the economy. Those macros will usually help you out with understanding what potentially could be happening. And now this downtrend line, we did break back up above it, but I will tell you to be very, very cautious here. We basically filled the rest of this gap here. Okay. We tested the downtrend line right here, bounced back up, and then now we have filled the rest of this gap. There are no other existing gaps above. So now that that's done, there is a good possibility. My expectation right now is maybe we'll see a little more chop around, test a little bit higher, and possibly start to come back down. Okay, because now we have this gap that just formed. So now there's going to be a reason to come back down over here.
And
Okay, so all these gaps from before. Yeah, go ahead.
that sets up the Santa rally perfectly. Because if the rest of this month we kind of like do what you just drew out, where it's like we go test an all time high because we had employment coming good or some other bullshit. Like we already have consumer confidence at all time lows, right? So the worst of the worst is kind of like already baked in. So I think that could be a perfect scenario for SPY even this month. That leads us into a Santa rally. If that is going to come, depending on if we get a 50-point cut, SPY's going to 500. I don't like it's going to die.
Well,
Like,
so it's really two different paths that we have set forward for us right now. I think the big uncertainty that we have currently is what will the Supreme Court rule upon the tariffs and again all the federal workers that have lost their jobs, because there was a provision within the bill that was voted on yesterday that is supposed to give back a bunch of jobs to federal workers, correct?
mm-hmm.
Right?
Mm-hmm.
So understand that that's directly going to be correlated with how the unemployment numbers come out, because a big portion of why unemployment's gone up not only are the fact that tech companies and the big companies are letting go a lot of employees, but the federal workers are also a very, very large part of that number.
Yeah.
And with the government being shut down for this long, they're going off of unofficial numbers, which the Fed, technically is flying blind with, like I mentioned last time. Now, and I know there's a very big if they end up reversing the tariffs, they end up forcing all the government, giving back all those jobs to the federal workers, then unemployment very possibly would come down, and then there's going to be a lot less of a need to cut rates at such a fast rate. So, I need to check the Fed right now real quick. Fed.
So there's a 69% chance of a 25-point
Yeah,
basis cut, 50% chance, or no, not 50, 3% chance we get 50 basis points because Moran is the only one asking for it right now. He literally came out today and he was like, I want 50 basis points in December. Tell Powell. Like, okay, sure. But 69% chance we get a 25 basis point cut. I think it's really going to depend on the data that we do get out this month. I will be doing breakdowns on all of those as well, like I normally do, because we are finally back in business, baby. But those are things that we really do need to pay attention to coming around this time, because that's going to play a big direction of what happens with SPY pretty soon here.
Yeah. But yeah, if we end up having better numbers, okay, so the rate cuts are all due to the fact that we need to cut rates in order to stimulate our economy. If we end up having to cut rates, the 50-point basis rate cut, that generally signals to the markets that something's, very, very wrong and we need to cut faster. Okay. So that's where the prediction of the fact that we would drop even harder and even faster if that goes on. Keep in mind, there's actually a lot of people out there that are, I read this earlier today. It's like, I feel like we're one bad headline away from like a 10% drop on SPY.
Yeah.
Like overnight. And that's kind of where we're at. It's like, there's still a lot of fear in the markets, even though we're all the way up here, even though we're near all-time highs. Remember, we're not even 2% from the top. We're 1.29% from the top right now. Okay. Yeah. So the fact that the markets are so fearful at this point generally means that there's a lot of stuff that's technically going wrong, that this is kind of a, there's doubt in people's minds as to why we're even up this high. And a big part of it is also the fact that, if we do, I think we will see some sort of decent drop, and that decent drop is just going to be saved by money printing. I mean, I think that's just the playbook of what we're faced with at this point. Um, so again, I think we peak up a little bit higher, maybe sell off through the rest of the month a little bit lower, fill in this gap that we just created today. And I do feel that there will, like, especially if they vote again on Thursday and nothing really gets resolved, markets, I would say markets, they're going to take it in two ways. The good part is that no real numbers, no real economic data is going to come out, which might be viewed as a somewhat of a good thing. But obviously, it leads into more uncertainty, and it just leads into the markets basically flying blind at that point. So I think we maybe see some chop around, and then very likely I feel there's some sort of headline that's about to come out that's just going to cause us to come back down below the 660 level that we see right here. It's markets are very sensitive right now is the issue. Okay. So, another part is the fact too, we saw a lot of gold coming in today. GLD is one of our leaders on the flow scanner for today, for Monday, right? 71, almost $72 million of calls against 3 million in puts. What does that mean, guys? Gold, I've always taught you guys, you can always look at certain indicators. Bitcoin is a flight to risk on. People saying we're willing to take the risk of that very volatile price action of Bitcoin. What happens when we flock to gold? What happens when we flock to gold and silver? Those are flights to safety. Okay. It's meaning that, hey, I'm not sure of what's about to happen with the markets, with SPY, those types of things. Gold is kind of like, he's the old man that has always been consistent, all right, and will always react properly to what ends up happening with the economy. Because if the dollar starts to go down, gold's going to go up. If we print more money, gold is going to go up. So the flight to safety, it's not going to be as volatile as Bitcoin and a lot of these other ETFs and other stocks that you could own. But it is, again, like I said, it's a bit of safety. It's a bit of consistency, you might imagine. All right. So the market's always choosing in between what they feel like is going to be the best risk to reward type of ratio for their money. And seeing this right now with gold, I just want you to be cautioned that it does mean that they're possibly going to really start to pull some money out of the higher risk assets that we see. All right. So a lot of money came. This one right here is the big one. $65.76 million spent for December, guys. For December. That's the thing. For about a month from now, a month and a week. So keep that in mind. All right. They see something.
And one thing to understand too, to piggyback off Eric's point, is like that if you go to look at what orders are hitting most, if you have doubt about that, all you have to do is go look at SPY and then look at what are people buying for 12.19. And if you see majority of puts for 12.19 and you see a ton of gold calls, there's an expectation there. You see a bunch of calls being sold for 12.19, that's not a good sign. You see a bunch of puts being bought, that means that they're expecting downside and profit taking for 12.19. So that's why, like, on stream, I'll be like, yeah, for swings right now, I'm looking for 320 and beyond. Like 320, 2026 is the date I'm looking for when it comes to those swings. And that's because that's what most institutions are hedging against right now, or hedging for or into some kind of catalyst. Like Logitech. I told everyone today on stream, I won't be looking at Logitech until probably April of next year, because we have till May on our contract. So, like, I'm not worried about it because people are still buying into that position too. So we're fine. But if you ever have like doubts, just go look at the inverse and then see what are people buying around that same date range. And that'll honestly clear up a lot of questions, because that's what I do on stream every day. On like, I literally look at one thing, I'll look at the inverse and be like, cool, are they playing the opposite way here potentially, or are people playing the opposite way here? Because if not, then it could just be noise or FUD, or it could be hedges that we don't need to get into because we don't have a ton of exposure on the upside or downside or whatever the position's playing, right? So just context is very important with this stuff as well. And that is one thing I like to always preach, is like, always look at the context of things. Macro data, all that kind of stuff. It'll help clear up so much doubt and like questioning you might do for yourself.
Yeah. That's that's why, you can always come join us on stream. But having STAX on your side allows you to find that confidence and confluence in your trades. Here's a little tip. I know, not too many of you guys probably know this, but if you go under SPY, for example, I want to filter for exactly what Max just said here. You can go on to the 3 lines on the side, go to the filter. Now I'm going to type in 12/19/2025. That way I see all and everything that comes in for it, okay? So a lot of that's today, but this also will help us and revise a little bit of what we see. So they are very bearish, sorry, you see the red lines, very bearish for up through December. Does that make sense? So you can go in here, you can filter for exactly what you want. You can also say, after or before. You can filter for a lot of different things in here. And again, same with this. Like, you could go and say, hey, premiums, I want my premiums, everything greater than, $3 million. All right. And you can see everything greater than that. So just, I know this is kind of, we haven't necessarily gone over it as much, but there are additional filter tools in here that, if you understand how to use, can definitely benefit you as well. So for example, if I want just to find everything that's 0 days to expiration today, I could go and do that under my signals, right? I can go and find every expected move. Oh, actually, might not be able to do that for expected move for some reason. Okay. Yeah. So for expiry, strike, these ones over here, you can go ahead and filter for exactly what you need. All right.
And it saves you a ton of time.
Yeah. Well, I'll tell you guys this. The little backstory about how we got, put together STAX was the fact that, if you notice in the Discord, there is an option flow part of the Discord that also scores things and gives you kind of an aggression score. Somebody was asking about that today. And I used to go into Discord, and I would use the Discord search tool to look up things and look up and try to filter through it. But because they are individual messages, it was extremely hard to analyze the data like you see here with STAX, right? So we put together STAX because in this situation, I can just filter, or I can filter premium by just clicking on a number or on a column right here, or expiration dates and things like that. So it really helps us out with the analysis when it comes down to it. Let me answer some of your questions too. Go ahead.
I showed people unusual whales the other day. I was like, by the way, this is what unusual whales looks like unfiltered. And everyone was like, what the? Because it's like you get an order every 0.1 second. And it's so fast, you couldn't even read it. And unless you put a bunch of filters in that, all you have to do is just click on the top of a column and it does it for you automatically. Like, you don't have to, like, try to put together the perfect filter that you have to apply to every single ticker that you want to look at. This automatically does it for you and saves so, like, that's what I mean. It's really a time saver. Exactly. Vu was like, we got epilepsy watching it. Like, it was just like nonstop. And we watched maybe a minute of it. And it was just like, okay, so what's a contract we should take based off that? And everyone was like, I don't even know what came through. Like, it never stopped.
The thing that I love about stacks is it really draws your eyes to what is actually going to matter when it comes down to price movement.
Yep.
We filter out a lot of stuff that we've determined what is really just noise. And again, it's at the end of the day, it's the institutions, it's the big money movers, it's the people that are, behind those closed doors that are friends with each other, that are having dinner with each other, that make the decisions as to where they're going to take price. And so if you're looking at everything, I mean, yeah, it does sometimes help to see if they spent $10,000 on an option, maybe if that option never gets any sort of action. But if you see somebody spend $10,000 on options for NVIDIA contracts, I mean that could be one of you guys. That could be, that could be chemo deciding to gamble on something. Like it means absolutely nothing at the end of the day. The true information, the people that are actually going to move the markets, they're going to put their money where their mouth is. And that's why we filter out things that we deem are unnecessary. And at the end of the day, you'll notice Stacks is quite accurate when it comes down to it because we're able to determine where we should actually listen to. Oracle over here, somebody asked. Oracle, I already went over earlier. We did fill the gap that we saw. Oracle has been fairly quiet overall. We haven't seen too much news come in. This entire pump just basically came back right down. This could, I gave two theses. This could be the end of the rally where we end up seeing this come all the way back down. PE ratio is still kind of high. A lot of money is being burned right now. And as a result, we definitely could see that become a real reality. And maybe we see this come down, reject this downward trend line and go down further. The other possibility is really we just come down, we start chopping around down in this lower range until we start to see quantitative easing. We start to see money flow back into the markets. Maybe Oracle comes up with some other deal that pumps it up and brings it up back up higher. Okay. Everything right now has been very news based. And a lot of it has to deal with the whole hype around AI and data centers and building for the future. But there's really been a lot of there's two main points in terms of the money. And if you take a little bit closer look into a lot of the statements, so for example, Meta and Microsoft are the two that I keep seeing, especially on Twitter, is that they're using these special purpose vehicles where they are hiding the money that they're losing from this build out. Yeah. Okay, so it's really being put behind, they don't have to claim it as a loss the same way that you and I would if we were if you and I ran a lemonade stand and we wanted to buy a special van to go out and sell down in the city, blah blah blah, and we spent 100K on that would come out of our profits, that would come out of our bottom line. But in this situation, these corporations have ways to go around how they report that. So I think like Microsoft lost like $30 billion off of this build out in the last quarter, and they don't have to necessarily report it as a full loss because it's an investment for their future. So that's the first side of it, where Meta and Microsoft, people that did some digging, noticed that that's actually starting to happen with it. And this is exactly what happened with the dot-com bubble and the burst from there, because they're using those same type of special purpose vehicles to do so. Is that a lot of the GPU chips that they're using and that they're buying, they are not, they're over reporting the potential revenue from it and under reporting the depreciation values of it. So it's kind of a double whammy where they're not only reporting that they're going to make more money from it, because a lot of these aren't making money just yet. On the other side of it is the fact that they're not devaluing the age, and as time goes on, there are a lot of these chips that might become faulty and might not run as well as they used to, and they are not using the depreciation values as properly as well. So it looks like there's a possibility in the next 1 to 2 years that they would be overestimating their profits by 20 to 25%.
Mm-hmm.
So those are where, again, it doesn't mean these prices can't continue to go up, but it is the fact that these cracks are starting to form within the foundation of the AI infrastructure and the AI trade. And in a lot of these situations, once one of the dominoes start to fall, especially like we've said, because they're all embedded with each other, it's a giant circle jerk, remember? If one of them starts to fall, it's going to take the rest of them all down with them. So there are big risks along with it. I can't necessarily tell you exactly where price is going to go because they can still continue to pump this up to 400
Yeah.
with the right type of news and with the right type of hype behind it. All right? So that's where at the end of the day I would say keep an eye on what is being said in STAX. So for example, we did have a big money Oracle call come in for $1 million for 2027. They're spending a decent amount of money on there, and WaveX is showing that Oracle looks fairly bullish going into tomorrow. So I think we come back up to retest this downtrend line, maybe around 250 before further decisions are being made. Galaxy GLXY, STAX AI got in over here. I don't think I saw too much going on with it today. Calls are about to go over puts right now. It's basically even here.
Yeah.
Nothing for today in terms of flow. It is at this range right here where it already did bounce. We definitely could, if this is headed up higher, it's really at a decision-making point. So it could start to go higher, or worst case scenario, we see this come down, break down below, and start to reject. It is one of those companies that their last earnings was pretty decent. They are starting to have a little bit of positive net margin. But I mean, for a revenue of $28 billion, your net income being 200 million, kind of rough there. I know, let's do CoreWeave real quick. CoreWeave, I don't love the fact that it's broken down, but it is, and I would say this area that we have right here, there are buyers and sellers here. So if it is able to hold that support, we should see this come back up toward 115, 110, 115 or so. Again, though, this is another one of those companies that is pre-revenue. Their net margin is negative. They're not making money. They could end up beating. There's a lot of companies that not only have invested in CoreWeave, but are going to be fairly reliant upon them for the future. So I would probably say on the downside of it, we probably come back into this gap or this area before we go up higher. Otherwise, if they do have good earnings, we could probably see this start to head back up. CoreWeave overall with the flow today, more puts than calls, which I thought was a little bit surprising, to be honest. But it is starting to become one of those hyped up names that at the end of the day, if they aren't able to prove themselves, just like we said, that's where we see the sell-offs happen. Seeing cracks in the market, possible AI bubble, liquidity issues, which would lead to a recession. Should we consider selling our swing calls for March and June? So it's hard to understand. Like, again, we don't know when that black swan event, when that first domino will start to topple. What I basically do is I look back onto what I see on STAX, and I let STAX help me make those decisions and look at the open interest to see if the big money is still standing in those positions, right? But again, March and June, especially, and you have to keep in mind the certain names, and for me, it's more so determining those patterns. Like, I still think Lyft and Snapchat are still headed up, at least through the this beginning of next year. And one other thing to also think about too is the fact that if we really do move into quantitative easing, that liquidity is just going to be injected directly into the markets, which will start to move things up higher, right? So, I wish I could tell you exactly. I wish I had a crystal ball to determine what's about to happen. But we can just base this off of probabilities right now. And you have to also understand too, the markets at this point are deeming that these big tech companies are too big to fail, which is at the end of the day, the Fed and the government are going to do their best to step back in to save them, if anything. Costco. I've always told you guys I'm super biased on Costco. I spend way too much money there. Anytime I do go to Costco, it is always very, very full with people. But it looks like it's starting to play like it. This is the area where if it's going to bounce, it's got to bounce here, right? Because you see how many times it's tested this trend line. 1, 2, 3, 4, 5, 6, 7, 8. 8 times and it's bounced off of this. This is a 2-hour time frame, right? And if you want to, you could probably draw this out here. This is where all of that is, right? So if it breaks down below that, that's where you start to have to worry a little bit more. But so far it's held up this range pretty well. PE ratio out of 50, kind of high, but we've definitely seen more. Consumers, I mean, the overall consumer is struggling, but people are still going to need to, people are still going to go to Costco and get what they need. All right. So, I mean, I've always looked at Costco as like a mix between groceries and, essentials. And also, they also do happen to sell, some of the other things that make them, or, the not only the needs, but sometimes a lot of those wants as well. Right. So a little bit more of not just consumer staples, but discretionary as well. So they're a mix in between the two. Another thing is the fact that the majority of their income comes from their memberships. A lot of the things that they do sell don't net them too much profit at the end of the day. So, their business model is a very interesting one to consider. Yeah, I don't see anything necessarily for them. More puts than calls right now, but no flow that's come in for them so far. Let's do this real quick. RGTI was a big name for a while. Indeterminate on that end of it. My thought of a lot of these quantum names is that they might be hitting their market cycle. So if this one ends up with some poor earnings, we very possibly could definitely see this come back down and then start to make a rounded out bottom for that. So doesn't look pretty. That's how I have to say. It doesn't look pretty, and they're in the we need to prove ourselves phase. And like look at this net margin, guys. Just look at that number. 2,201% negative on net margin. So they make a $1.8 million on revenue, and their net income is a negative $39 million. So yeah. XPEV. Oh, they're looking kind of strong right now. Probably will come up toward this 27 range to test. I know a lot of Chinese companies, I think, like I said before, a lot of Chinese companies are in accumulation at the top of the range. I've started to believe that I think in January we'll see the next move up for them. Yeah, JD, same thing. Like I said, I'd extend this out January is probably where we're gonna see new life being breathed back into this. It's still in this little range. So again, I mean, it's still smack dab in here. It's really chopped around, and the candles are still fairly small, so it just has not moved up. Hawaiian Electric. Double check. I know this one, the only reason this is even on most people's radar has to do with the fact that it was a STAX AI print that came in. I think they are down a little bit from where they entered, but that's not unusual when it comes down to STAX AI. We'll watch a little bit of earnings, and I do have a little bit of stuff to share about STAX AI with you in a little bit too. So, but Hawaiian Electric, I think it also has just to do with it's an electric play, right? We saw PCG, PG&E move up already. We're seeing a lot of these electric companies starting to gain some traction. So HE, I think maybe just needs a little bit more time. I do believe those positions were for 2027. So you got to be patient with those ones. All right. A quick note, especially STAX AI, like I showed you. So was it August? August prints that I showed you guys? No, September. Yeah, September. Did I do that right? Yeah, okay. September hit rate. I had to revise them because I noticed I input a few numbers wrong. September hit rate was a 63% hit rate with 4.71 average returns. So 4% was the average return for September when I back tested it last month. Okay. Now a month later, so what I just retested it, it went up from a 63% hit rate up to a 91% hit rate. And that 4% that we see, that 4% hit rate now is at or 4% average returns is now at 146%. Okay. So know that, especially with these prints for STAX AI, if they're buying time, there's a reason for it. And if you're judging it based upon the first 3 months that they got in, you have to understand that there's very likely and very potentially much more to come. Because if they purchased, let's say they purchased 15 months of it, right? You're just barely getting into that contract. So keep that in mind. All right, for HE. I think this down the line we'll start to see this move. All right, RGTI, we move yet? And CoreWeave are the two. Let's just do this for everything. Yeah, Circle reports too.
Yeah.
Oh, Circle reports later in the week, right?
I think they're like Wednesday, aren't they?
Yeah, they're Wednesday. Circle, I would say, kind of looking bullish with this, I'll be honest.
Yeah.
All these prints coming in, Circle's looking bullish. If you're gonna gamble on earnings, this is good to see, especially all the short-term stuff right here. I will also say there's a lot of chatter about Beyond.
Dude.
There's been money flowing into Beyond, but I don't love it just because it's a meme stock at this point.
Yeah.
But like behind the scenes, like insiders and politicians, and there's I don't love those insider trades. I was just noticing a lot of chatter about Beyond though.
Well, because they keep like
Beyond could go up.
JP Morgan like opened up a position. And then I think Citibank opened up a 600K position today in calls.
Are they also selling their, was it Starbucks or McDonald's? Starbucks is selling their patties now or something like that. There's a burger that they're selling.
Yeah. McDonald's made their
I don't
own
know.
version. I know that. Go beyond. Because they report today. They switched their earnings date. It was supposed to be Tuesday, but it's today. After
Oh, is
hours.
it?
Yeah. Because I put out the article for it, and I was like, "Yeah, they report Tuesday after hours," and someone was like, "Nah, dude, they redid their thing and they report Monday."
Oh, well, we'll see. We'll keep an eye on it. Beyond RGTI, CoreWeave. I'll probably give them 5 minutes before the report hits. Beyond AI.
Beyond partners with OpenAI, so their 3D printers can print their patties for them now. That's about to be a thing too. Did you hear about that? They're gonna
What?
start 3D printing meat.
I mean, the technology is there. Just, you know, maybe the next generation will be okay with it, but I know you and I are not okay with
No,
it.
not at all. Someone was like, "I made this at home." I feel like, no, you didn't. You do not have cows at your house, so get that sorcery away from me.
Terrible. Just terrible.
Man, I feel so bad for this next generation. They're gonna have no idea what it was like to live in the real world.
I mean, I love my steaks. I love my ribeyes, and I just look at it as like, man, when my kid is like old enough to appreciate it, how many dollars per pound is it gonna cost me?
Oh boy. Yeah, because think about how cheap college used to be.
Seriously.
Like,
Well, RGTI, CoreWeave. What else did I post that we have today? ASTS. Oh, TeraWolf. Plug. Plug. Wolf. Wolf coming back down. ASTS. Nothing so far. Oh,
beyond.
Roxy.
Vu, shut up. Beyond AI to the moon.
Market
Wag,
Lab.
no eye print.
Oh, BBAI. Big Bear is reporting too.
Big Bear's got a gap and a half to fill. They got good news and said, "That's enough for us," and then just fell off a cliff.
Oh.
I mean, I will say tech mediocrity is at an all-time high in my opinion.
Oh, CoreWeave? Nope, that's not a move.
That is at an all-time high right now.
Why is this one not moving? Oh, that's why. Oh, there we go. Rigetti. No, hasn't. No, they did report. They dropped 3% so far for RGTI dropping down. Oh, CoreWeave. Is that it?
With the Hulk hammer.
There are strong third quarter results. Keep in mind this first move is not necessarily it, but they are up almost 5%, 3%. But is it going to be a fake out? You see that long upper wick being left. Oof. Yeah, this earnings seasons, there's definitely been a whole lot of fake outs. I will say that. We've watched a lot of those. Or just shoots up or drops and then comes back the next day. Ends up flat. RGTI down 4% now. ASTS nothing. Plug power nothing. Oh, they reported. Plug power is basically flat. BBAI up now. But I don't think they've reported yet. 3%. Wolf was down. Yeah. Wolf reported. Wolf is down 5%. Rocket Lab. They moved their earnings.
Did they?
Maybe they did.
It's a bold move, Cotton.
I don't see it. Yeah, Rocket Lab. Interesting.
That's probably not a bullish sign if I'm...
Yeah, that's not a good sign. Ooh. It's not determinate yet, just... Plug power coming back. Oh, they missed their Q3. But they're flat. CoreWeave. Looks like they beat. The price definitely isn't moving nearly as much as you kind of expected. RGTI is down. Big Bear is up, but I don't see a report just yet. ASTS, nothing. TerraWolf is
You
down,
can't hear
but
anything, Wolves?
slightly making a recovery.
That's
Still
weird as
down
fuck.
like 4% or so.
Don't worry. We're about to wrap up here, and then I'm gonna. We got NFL bets coming soon.
Plug power's flat. Oxy's flat still. Still no report. All right. Let me do this. Yeah, we'll see what ends up happening. I've noticed like after hours movement is like only slightly correlated to where it's going to end up opening up. Like we saw Snapchat move 25% after hours. It ended up the rest of the day it was like 16%, closed at like 12. Lyft had big movement as well, and like Lyft dropped at first and then came back. And it didn't make its move until this week, right? So understand right now, there's definitely a lot of manipulation happening behind closed doors. That's why for right now I'm staying away from a lot of these earnings plays unless something with STAX basically is shouting that this is the direction it's going in. But we haven't really necessarily seen too much of that. I think Circle would probably be the only one right now. We got to keep in mind what comes in the rest of the week. This might be a positive movement and a solid play to the upside because they are buying such short-term calls here. So keep Circle on your watch list for tomorrow. You guys can remind me too. I'll post what I see. But as of right now, yeah, Circle's looking solid moving into the next few days. Let's see. Big Bear moving up 3%. ASTS basically flat. Nothing so far. Occidental, petroleum, no report just yet. I'm gonna give it one more minute, and then I want to go over a little bit of STAX AI stuff with you guys.
The Discord doesn't want to work, but the Twitch stream, I think my voice works, right? Test, test.
All right, these reports should be out. Let's see, ASTS dropping right now.
What the fuck?
Plug power is up. Big Bear is
Hello.
down. Oh, it might come back.
Hello.
Big Bear
RGTI
is making a recovery.
hello.
Down. Oh, it might come back.
Hello.
Rocket Lab. They did have earnings. Rocket Lab's moving up.
Okay, bet.
That's a strong move.
Yeah, I don't know why it like blocks me out on Twitch.
What else am I missing? Wolf. Wolf is down. All right, we'll see where Rocket Lab goes. It looks like that might be the one that moves. Okay. Let's share this. Okay, I've got my STAX AI backtesting. So far, I've finished up 2025. I still have 2024 stuff to go through. I spent nearly like 2 hours on this yesterday just updating stuff because, again, I have to go through these manually. I have to go in here, look up what the price is, and fill these in individually after I download my sheets. The thing for last month, so the month of October, we did have a hit rate, 55% hit rate on average, 57% average returns. We do have quite a few of these that are kind of just fluctuating in the ranges. We do have a few of these that actually have dropped quite a bit since their high. So like this one, AMSC, you can see here, went up and then came right back down. Generally, what I look for is on the right side, how many days to the high. ASMC went up 66% in 3 days, but it's dropped pretty hard since then. Okay. There are a couple big ones. So AMD obviously had a big pop. AMKR. Google's been doing really well. Google's one of our big hitters for quite a few of our backtest numbers. Same here again, Google. And then Snow and BTDR. All right. Dell up 83%, HMY up 84%. So really, again, you kind of have to pick and choose the ones that you have a little bit more confidence behind in order to get into. And keep in mind too, peek at how much time they've purchased. Some of these that are currently down, this is the spot price being down, could still give you good possible entries for the future. All right. So a reminder, one of our users or one of our members, Daniel, did us a solid, and he actually went through and did a full back testing of a lot of these prints and noticed, he said, I think about 10% of them move up right from their entry, which means 90% of these will have some sort of drawdown before they hit these highs. Now, with STAX having such a high hit rate, remember, we're right around 90% for our hit rate. That basically means that there are options, or there are a lot of these that give you opportunity to get in at a better entry than what they did. Okay. Um, let's see. In addition, so the month before, the month of September, this started out as a 23 out of 30 or 21 out of 33, which was around a 60 something percent hit rate. So give it an extra month and another 30% of those ended up being wins. All right. And another thing that was really interesting to see was that on average last month, the back testing for this, the average returns for the 32 prints, right? There were two that I didn't test until this month. The average return was like a 4 or 5%. So they weren't doing too well last month. This month, everything moved. This month, they're now at 146% average returns across these 35 prints. And now we're at a 91% hit rate. So, Max and I have said for you guys, especially when you get into a STAX AI prints, either if you're getting in right away, you have to understand that you want to give it room to average down. But I would probably say some of the better entries for a lot of you guys would probably just be to wait a little bit, have your chart set up and see if it moves into a point of supply and demand, and use those as your entries afterwards. You don't have to rush on STAX AI prints, but if you do get in after they've dropped maybe 20, 30, 40%, and then you get in, imagine that these numbers that we've reported here are actually going to be multiple. All right. So it's going to be much higher because you're getting in at a much better entry, and the highs that they will hit will end up being even higher percentage return relative to where you entered. Okay. So if you keep going back, I think one of the most impressive ones, so if you go 3 months back, this is August. August, we had Intel. This one was the one that really 1,500%, 1,522% return on that one. Okay. These are about to expire, but they have a strike price of 25. And right now Intel's trading at 38. So they definitely, made multiples on that return. Riot over here, 718%. Baidu here, 469%. Okay. And yeah, this Meta one's down. This EMN one's down. They never really fully recovered just yet. But look at their expiration dates. They still do have some time. Okay. Crazy ones here. STX, 1,200%. BABA, 1,200%. BE, this one, Bloom Energy. Oh my God, this is one of our biggest hitters so far. 73 days, but it's at 2,600%. So basically $100 turned into $2,600. All right. They entered at a $3.86. Dude, they entered at $386. These contracts are over 10K each now. Right. This one's about to expire. It's getting close to its expiration date. But even here too, just the stock itself is up 325%. All right. They got in at 32. The stock itself is at 139. So you don't have to play the options contracts. If you want less risk, you can always still go with the actual stock itself. Okay, another one. So here I said Google moved up quite a bit, 1,300% return. BABA, 500% return. QQQ. One thing I've noticed as well, if you see QQQ by IWM, when they do move, they're averaging, I think, around 300-400% on a lot of those ones. So just understand, if you see them getting into those positions, because it is rare for us to see them buying so much time for some of those, QQQ, SPY, IWM, those big ETFs. I've noticed that these tend to be pretty safe bets when it comes down to their movement. This is the one that is nuts. April, we saw the tariff tantrum and we saw that huge dip. And due to that, we saw big money snatch up everything that they could. So if you take a look here, okay, I've got it color coded. If it's the light green, it's between 0 and or between 15 and 100%. Dark green basically means it is over 100% return. So look at April. It is all over 100% return. That is ridiculous to see. We got AMD here with 2,200%, CLS with 1,000%, CORZ with 1,150, Affirm with 850%, Silver with 1,100%, SPY, like I said, this one 1,300%, Bank of America 300%, SLV 1,100%, AMD 1,200%. Man, there's just one missing here, Alibaba. Alibaba was one that actually dropped, but 28 out of 29, 96.55%. I will straight up tell you guys, these numbers are so ridiculous it's hard to believe, but I went through every single one of these. If you want to verify them yourself, I'm happy to give you and get you access to this sheet for yourself as well. But look at this average, guys. If you just bought what they purchased in April, average return is right under 700%. 693% for the prints back in April. That is nuts, right? This one, Broadcom, AVGO, 1,500%. And look underneath it, Oracle and Google as well. Oracle, 1,500%, Google, 2,200%. We've got a lot of these, especially this back testing that I did. I noticed a lot of these moved into the 10x and above. So we have thousands of percent return on a lot of these, right? GDX here, okay? Hit rates are all pretty high. Keep in mind, I've only finished dude, I have to go through these one by one. Go on. I have their chart saved. I go in here. Oh, this one's already expired. Let's give you one. Let's say this one, CAR, right? They got in at $8.60. Why is that not showing? There we go. Right. This is its price as of October 27th. I have to go in here. I have to check the chart, see where it went, and then I update all these. So CAR went from $8.60 to $78, so 800% return on these, right? And I will say too, one of the hard parts about STAX AI is the fact that the back testing gives you an idea of how far things have gone, and you do kind of end up having to fight against yourself and not get too greedy, because some of these charts do hit a high, right? What I have here is from the high that I've stated for those contracts to today, you'll see some of them do just drop down from their highs. So you still should be very careful to set up some sort of stop loss for yourself or have some sort of trading plan for it. It is not unusual to see 100% returns and more over time. I do believe that is really just what big money is setting themselves up to. But there also are situations where you will see some misses, or you will see them just drop from the beginning and potentially never recover. So there still are. I will give you guys, there was one statistic I did for you guys on one of the previous back testings. I will have that done for you guys in the video that I'm planning on putting out later this week. But basically, I'll take all the ones that are misses and I'll set them at a full loss. So there'll be a straight minus 99.99%. And you'll still see that our average returns are still going to be fairly high. And that just basically means if you're able to manage your risk properly with these positions, it's pretty hard to lose with STAX AI on your side. Okay. So far, keep in mind, this is not final, but so far, our hit rate, and this is for a 15% or more return on them, our hit rate is at a 87.74%. Now that's a little bit lower than the 90 and 91% that we've had, but keep in mind those were using 0% as the threshold to consider what's a win. If we just went with 0% and higher, It's like a 93 or 94% hit rate. It's crazy, but we understand you're not getting into a stacks AI position and expecting a 5 to 10% move in selling when that happens. So that's why we moved it up to 15%. The highs on average for, keep in mind, we have over 2 years of back testing now. Okay. The highs on average for stacks AI prints 296%, guys. So we're just shy of 300% right now. If you just went off of 2025, that's actually it's over 300% for all our 2025 prints. Okay? So I want you guys to understand there's Stacks AI is such a powerful tool. Obviously, there's a learning curve to it. I've been doing these back testings for the last 2 years now, a little over 2 years now. We are coming up to, December 1st is basically our 2-year anniversary of Stacks AI and Stacks overall. But all these numbers are here for you to see. If you don't trust it, I can send you guys the document. I can let you guys look over it yourself, verify my numbers. I'm sure there's little bits of human error here and there, but more often than not, I find that my human error actually underestimated the numbers that we had versus me overestimating it. But at the end of the day, Stacks AI, if you know how to use it, is a very, very powerful tool. And it's also one of the things that leads me into a lot of my plays, as you guys have already noticed too. For example, one of the reasons why I had such a strong conviction in Snapchat is these positions here. I'm in exactly these prints right here, right? The $13 calls for June of 2026. Another one was Lyft. To find it, Lyft had 2 prints that came in right here. Lyft and Lyft came in September earlier, right? September, right before it had its pop, and right now you can see Lyft is continuing to run as well, and they're buying time on those. So, for me in my trading strategy, if the trades I have the most confidence in, number one, my charts show some sort of accumulation, some sort of, big money buying. Stacks itself shows positivity, so we see calls being bought, we see WaveX being positive. Those add additions to it. And then last but not least, if I see Stacks AI also in those positions, those are situations where I find the most confidence in. Okay. Backtesting is only for Stacks AI filter prints. I'm going to tell you guys, if I had to do backtesting for big money and unusual, I would never sleep. Like, this itself already takes me multiple days to go through. And that's for us to have, let's say, for example, last month we had 29 prints for Stacks AI. Big money, if you guys were to see like big money overall, just today, right? Just today, you already have like 2 to 3, maybe even 4 pages. Yeah, even more. So if I have to do this manually, that's ridiculous. If you guys have ways and you guys understand how we can automate this process, I would love to, hear your thoughts, hear your experience with that type of thing. I'd love it, because not only does it save me time, but it takes out the element of any sort of human error that is caused by me, mistaking something here and there. But again, I've gone through these prints every month. I actually have to go back through previous month's prints. And so that's where it gets double and triple checked as well. So any questions on these?
I will say, if people do want like a more daily scope, I take basically the first like page of the top prints from Unusual, Big Money, Dark Pools, and Flow Scanner, and kind of just give context behind like what came in for the day. Like today, the theme was basically institutions are running for safety, which plays very much into the narrative we were talking about earlier. But I will say something, Eric, that I've been working on in the background. I'm working on building a like scanner where I can screenshot the prints, and then it basically gives like context as to why these prints would occur based on like the order condition, the order type, the strike, and what the price is currently at.
Mhm.
So I'll probably have to talk to Chef, but I was thinking like if there's a way where, because I have a Polygon IO account myself for like options and market data. So
Okay.
I'm currently working, and I'll hopefully have an MVP out by December, where and I was waiting kind of to tell you about this, by the way. So I guess what a better place than in front of our whole community. I'm working on a way where you basically users would be able to screenshot prints they see, and then it would leverage AI based on an AI that's trained on like market analysis, and it would give you
Yep.
context as to why that print may have occurred. Like, for if you guys have been following Trades and Gains or Ivy Reaper on Twitter, uh, honestly, the way I'm able to find levels of like, hey, we could find calls for Tesla above 437 before the market opens, it's because I'm taking literally our STAX AI prints and our Investor Central Club prints, and then I'm just asking for context as to, okay, based on these prints, what do you think levels of support and resistance and profit taking are being put at? Because I'm looking at the buys and the sells. That's the thing. So it's a little different just in the sense of like, I know with the back testing, it's really just looking over the STAX AI buys. But one thing I have been learning through like training this model is the sells tell a even like a bigger story in terms of like those resistance and support levels that we sometimes see like crazy rejections off of, and people will be like, I never saw that coming, and it's like, damn, I saw a print for that like a month ago. And like here we are a month later, and a week before it expires, and it like hits off like of that point. So I'm working on some automation stuff on the background, but it still messes up like strikes and stuff like that. So I'm not
Yeah.
fully confident in it. But I also think that's like a text issue where it might like misinterpret like an 8 to be a 0 potentially if I have it zoomed out
Okay.
at like 70%, for example. And that's
Okay.
where I might
Yeah.
have to
We'll
talk to
we'll talk
Chef.
about that. I can get you the full sheet and stuff like that. So
Yeah, because I think I could use
yeah.
a CSV too as a replacement.
Yeah, I think we could do that or an Excel sheet. One of those would probably be more efficient and better for you to use,
I
just
know
having it as a text file instead.
I know a CSV would be beneficial because I use N8N, Notion, and then I'm using Claude AI, which that's like the main format
Okay.
for it.
Cool. Yeah, I mean, for those of you, you guys in our community, I want you guys also to understand, like, Max and I got involved with Investor Central Club because we started to contribute on our own and started to do little things on the side that, not only was it helping us with our own trading, but it was just basically sharing the information of what we've learned and what we've experienced, right? So a big part of what Stacks AI was built off of was the fact that I used to have to go into our Discord under the options flow channel, and I would use the Discord search tool to find the highest scores and the most premium being spent. But seriously, I would go through, I would look up, premium semicolon, 1.1 M for 1.1 million, 1.2 million, 1.3 million. I'd go through the entire page of it to see, and then I would go back and back test those to see, because my theory was the fact that they would, if the score was high enough, the number of millions of dollars they spent was high enough, there's got to be some sort of correlation to their type of return. And obviously that wasn't efficient. It wasn't exactly the best way to do things. As time went on, Chemo brought me on board, gave me my own channel. I helped teach ICA, all that. And then we developed Stacks together. And Stacks AI was based upon that theory that I had of the fact that, big money institutions are going to put their money where their mouth is and understand that if we have a way to piggyback onto those trades or at least be able to view those trades in this manner, somebody always knows something. And that's what led into it. That's how I got brought on board. Same with Max. Max was extremely active on Twitter and YouTube and social media, and we took note of that. And he was using, the STAX platform,
Hmm.
and eventually we brought him on board because he has, not only the work ethic, but also is able to help explain a lot of the things that we're seeing and help us, not only analyze it, but also output the content that helps you guys understand what's going on.
And by the
And
way,
so
I
that, like,
I told Eric and the whole team, I was like, by the way, if this doesn't work out, I hope you know I'm still gonna pay for the platform and continue to do what I'm doing. So like, it had nothing to do with like, this is just something I love to do. I quit my job to do this full time because I looked at it as, if I'm gonna die on a hill, doing financial analysis and making it easy for the average person to understand is the hill that I'm more than happy to die on. And I don't care about the whole making money aspect. It's for me just like decoding these complex ass things that Wall Street tries to do. But if you take 5 minutes to understand it, you'll start to see the patterns and see it's really not that complex. So that's really why I got into it, and I'm just happy to be here, to be honest, like at this point.
yeah, I mean, at the end of the day, we always talked about how one of the big goals of what we're doing here with ICC and with Stacks is to build a community of people that, are like-minded, obviously want to make money with the markets, but also understand that the markets are a place where we continue to learn over time. And that learning isn't going to stop. Okay, 1 second, buddy. But again, I know today that was a lot of information here. Again, if you guys have questions, don't hesitate. Remember, I'll never DM you directly because, again, there's a lot of scammers and bots out there on Discord. But if you have questions, you can always just click on my name, send me a direct message. Happy to answer questions for you. If you guys have things you want to see, or if you are able to help, if you're able to help contribute in some way, shape, or form, please let me know because we all have our strengths and our weaknesses. For me, I don't necessarily have the hand at coding some of these things. I have an idea of how I would code, but I don't actually know it myself. Where if we could get this stuff to be automated, we could just click a button or open up a document to find out all of these numbers and things like that. It definitely would not only save me more time to deal with this little kid in front of me. Yeah, I know. And but also it would, like I said, eliminate that type of human error that exists when it does come down to me doing this manually. Okay. Um, Red Bulls and vodka. I know what I'm getting you at the Christmas party.
Woo! Eric, give me literally till December 15th, and I will like send me a CSV. I will literally I will build something that automates this whole shit. All right? Deal?
Yeah, we'll get it done. Sounds good.
Deal. Virtual handshake.
Uh, all right. If you guys have other questions, go ahead, message us. We'll be back at this tomorrow, Tuesday. We usually jump on here at about 12 o'clock, so noon here on the West Coast Pacific time. If you want any additional information, go ahead, message me directly. We can chat there. But hope you guys enjoyed today's class/show. Oh, yeah, real quick. Somebody mentioned CoreWeave dropped real quick. Wanted to see that. Ooh, CoreWeave. It came right back down. It's down 2%. That's nothing. But yeah, I will see you guys in the next one. Most important earnings this week. Oh, real quick, let me see that.
Beyond.
Cisco Wednesday. Cisco Wednesday.
Yep.
JD for some of you guys that are probably still in that trade. NBIS tomorrow. Beyond, yeah, I think Beyond Meat's probably going to be the one that gets the most attention, to be honest. So, but Cisco and then Applied Materials, AMAT. I think those are the ones that are most directly correlated to what's going on with the AI trade.
The old.
I think Nvidia's coming up soon.
I think it's next week.
Yeah, something like that.
Cisco is the old white people indicator. If you want to know how it's going to do, go talk to your parents.
Nvidia's not next week. No, it is next week. Next week, 19th.
Oh my God, I'm
that's
so
another...
excited to write that thesis. I can't wait. They got some stuff up there.
All right, guys.
All right.
Yeah. I think Jensen's got some more stuff to say. All right, guys. You guys have a great rest of your day. I'm gonna go take care of this kid.
All right.
Later, guys.
All right, we're back, people. Can you hear me? Can you hear me, babes? I missed you guys so much. If you are still fiending for some streaming, come hang out with the free Wi-Fi community. That's a good, that's a banger ass. Are you fiending for some streaming? Get your bitch ass over here. It's the old white people indicator. All right, gang. All right, you virgins. Hold on, I gotta pee so bad, dude. I've had to pee for so... Oh, my God.